Today, Ron Barron went on CNBC and shared some of his predictions for Tesla stock, and more specifically, what he expects the stock price to be in 2025 and 2030. Of course, nobody has a crystal ball, and there's a lot of intuition and guesswork involved. But in this video, I want to go through some of his napkin math that Ron Barron shared and give my take. So first, what is napkin math and why is it important? Napkin math is simply being able to make simple calculations like you would on a piece of napkin and to simply explain those calculations. For investing, it's about being able to demonstrate the company's growth and profits and also how that leads to a company valuation. I think napkin math is one of the most important investing skills out there because it forces you to understand the businesses you're invested in. But there are a lot of different ways to approach napkin math. You could value the current business or value the business 2 or 3 years out or even 5 or 10 years out. And there are a lot of different ways to reach a valuation as well. All right, with that said, let's look into the napkin math by Ron Barron, who is a billionaire and founder of Barron So Ron Barron says he thinks Tesla stock will be worth $500 to $600 per share in 2025. And then in 8 or 10 years, he expects Tesla to be worth around $4.5 trillion. That's roughly $1,400 to $1,500 per share. So about a 7 times gain from here. So how does he get to these numbers? Well, he backs up his 2030 price target with some napkin math. He says if Tesla sells 20 million cars per year in 2030, and each car sells for about $50,000, then that's $1 trillion in revenue. If Tesla has 30% operating margin, then that would be $300 billion in operating profit. Add a 15 multiple off of that, and you get $4.5 trillion in market capitalization. All right, so a few comments on these numbers. I think 20 million cars in 8 to 10 years is a fair estimate, but $50,000 per car seems a bit high if we're not including any full self-driving revenue. And also 30% operating margins could be high if that doesn't include full self-driving at all as well. But let's say we lower those numbers to $40,000 per car and 20% operating margins. That's $8,000 of operating profit per car. You times that by 20 million cars, that equals $160 billion in operating profit. Give it, let's say, a 20 multiple, that would be $3.2 trillion. Now that's just for the auto business without full self-driving. And Ron Barron does note that. He says his napkin math numbers don't include robots, autonomous vehicles, or batteries. And that's where things get interesting. The long-term base case for Tesla stock looks good and is compelling in and of itself, but you also get call options on full self-driving, humanoid robots, and energy storage. And if you don't think those businesses are worth much, or you don't think Tesla has much competitive advantage in those areas, then you're not going to be willing to pay anything additional for Tesla. But if you're confident and very confident on Tesla's real-world AI capabilities and the enormous markets of full self-driving and humanoid robots, then the whole equation changes. Cars give Tesla a big market, but full self-driving and humanoid robots expand Tesla's addressable markets by at least an order of magnitude, if not more. And that, in a nutshell, is why Ron Barron is so bullish on Tesla. He doesn't need full self-driving, AI robots, or batteries to justify his valuation for Tesla in 5 to 10 years. But if those things work out, then it's just additional upside for him. All right, so what do you guys think? Share your thoughts in the comment section. Hope this was helpful. If it was, go ahead, like and subscribe.